Alright, what is going on, everybody on YouTube? Griffin here, coming back to you guys with another live stream from the Millennial Motivation Entrepreneur YouTube channel. First and foremost, before we get going, of course, if you're new to the channel and looking to join an awesome network of like-minded people, learning to trade in the stock market in all sorts of ways, futures, options, even just simple swing trading stocks, day trading stocks, that kind of thing, definitely consider hitting that subscribe button below and hitting the bell icon. That way you'll be notified every time we go live or upload another video. If you're new to this channel, we do these Sunday stock talks, stock watches, whatever you want to refer to them as, every week, unless if I have something going on that I don't know about, and then I'll let you guys know in Discord, of course. And then we try to upload at least one video, go live once, I should say, once in the middle of the week. Did not get to do that this week just because it was a super busy week. And of course, there was a lot going on within the market, being that we are now touching right around 2,900. So we'll get into that and all that good stuff here very shortly. So first and foremost, I want to kind of let you guys know something I've been testing out. I finally got my Thinkorswim back and working, as you guys can see too, finally at last. But a new type of, I would say, trade. It is a trading style, I guess. It's more so of if you're looking to kind of day trade the futures market, specifically ES. I don't know so much about MES because, again, with MES, it tends to be more tactical. You're looking for more of a minimum of 2 points, preferably 4, just because of your fees and all that stuff. Fees and commissions, it takes about 1 point for most people just to break even on their trades. So, I mean, for sure, you're going to want a minimum of 2 points. Even then, you're only talking about a $5 profit. So you definitely got to be more strategic when it comes to MES, either that or obviously buy some more contracts, which then, I mean, still even then you're talking about multiplying your fees and all of that, but at the same time you're multiplying your profit. If you're doing, say, 2 to 4 contracts, not too bad. Still not a lot of collateral considering how much ES is, but once you get over 4 or 5 contracts, you might as well just save up and wait until you can do ES, or just continue to do that 2 to 5 range of MES contracts and just kind of slowly but surely build up your account, of course. But with that, with the trading style, so as you can see, I don't got a lot pulled up. I usually have a couple of EMAs pulled up, but a trading style we've been doing recently, and it worked out pretty well. I've only been doing it paper trading wise for like what I do, like Thursday night, Friday, and tried to do it again today, but we were kind of flatlining around the 8 EMA. So if you're wondering what this yellow line here is, it's the 8 EMA, displaced EMA if you're on Thinkorswim. And I think they all refer to it as a displaced EMA. And pretty much what you're doing is you're waiting for some sort of confirmation that's either going to break below or break above. Like right now it's trying to break above. So you wouldn't hop in right now necessarily, even though it is tempting. You want to wait for a confirmation. Usually, like right now, it's up on a green candle right here. What you'd want to see is maybe a potential pullback to the 8 EMA on that next 1 minute candle, or if it decides to just go ahead and start taking off, then you go ahead and hop in the trade, ride it out for maybe a couple of points. Like I said, this is more so for like a quick day trade, like scalping, I guess, of the ES. MES, it's a little bit harder, but if you'd done this trading style, say on Friday, which we were actually discussing in the Discord group chat, you can see right here, boom, we broke above the 8 EMA there, and then we retested it, tested it about 2 or 3 times actually on the minute chart, and then it just kept going higher. And pretty much you're just going to set, so once you get up on the trade, just go ahead and set your stop loss at break even after your fees and commissions, which if you're doing MES would be like a 1 point ahead of where you got in, and if you're trading ES, you could just do break even, I guess, or you could do like half a point or something if you still want to make $50 at the minimum on your position. But from there, just ride the trade out, and then once it looks like it's going to break below the EMA, just go ahead and get out of the trade. So if you just wrote it out, you would have got in, say you waited for extra confirmation and got in here, even at 29.0950, we'll call it, and you just wrote it out, baby monitor, wrote it out, and then once it broke below, you went ahead and cut. That was almost a 70-point profit right there. Now that is unusual. Obviously, we had a hell of a bounce at the end of the day on Friday, and we pretty much gave it all back already early on. We're trying to come back a little bit here, but see, like right now, wouldn't necessarily be bad timing to go ahead and try this out. I don't know so much about the overnight session, especially on a Sunday night. There's usually not as much volume. There is at the very beginning of the market, like that first 5 to 15 minutes, but then it seems to kind of wear off, at least until Europe opens back up. But you can still definitely try it out. Like if you'd waited right now, you got in at roughly, we'll just say 29.15. It's currently at 29.19, so that would have been 4 points already right there, almost 5 points now. You would have been up on that trade. And me personally, once I get up 4 to 5 points, I'm fine with covering profits. How's it going, Chase? I just seen your comment here. Let me get it. Trying to figure out what that happy medium is with getting these windows pulled up. Let's see. Just to trade like future, just trading in general, I'm still using Tastyworks personally. And longer term, I probably will end up going to the Thinkorswim platform. We were talking about just platforms and whatnot in the Discord group chat, and apparently, like TD Ameritrade, Thinkorswim, they will negotiate with you on your fees and all that stuff, or the commission side, I should say. The fees are set by CME Group, but the commission side, they will work with you. It's probably one of those things where the more money you put in the account, the more likely they are to negotiate with you. But it sounds like you can definitely save $1 to $2 even per futures trade, which, I mean, say you do even just 5 trades a day or even just 5 trades per week. That would be $5 to $10 per week. Over 52 weeks, you're saving over $500 a year just by simply trying to negotiate. So for those of you using the Thinkorswim platform, TD Ameritrade is your broker. If I remember right, somebody actually bought them out recently, but whoever you're using, just keep in mind you can always try to call them up and negotiate those prices, of course. For today's quote-unquote lesson, not even lesson, but for today's stream, I do actually have Robinhood pulled up because I know a lot of my viewers, I would say close to probably at least 70-80% of my viewers do use Robinhood. I wanted to kind of pull up because we're going to talk about options a little bit today, specifically like SPY and like how you can kind of hedge your other positions in this market that seems to be continuing to go down, at least for the short term. We're holding pretty well above 2,900, I will say, but which actually we can go ahead and take just a big look picture real quick. So as you can see, obviously we've had this massive dump. We were talking about this like Thursday, Friday in our Discord group chat, which if you guys aren't in there, I keep mentioning it, is down in the description box. It's totally free to join. Don't charge for anything with this channel, of course. There's like 130 of us in there now. And as long as you have the app downloaded, download the app first, then click the link and it should take you right there. But we were talking about this in the group chat on Thursday or Friday, just how often, if ever, me personally, I've never seen this in now over 2 years of trading personally. I've never seen the RSI having this kind of movement just stupid oversold on our 4-hour chart, which in my opinion was kind of signaling that, hey, you know what, at least in the short term, we may be getting some sort of a bounce. Of course, we did get a pretty decent bounce on Friday, ultimately got rejected. At least so far, it's still early on. Wouldn't be surprised if we wake up Monday to see that we're up 30 points instead of down 30 points. And we're actually, the lows, we were down roughly 60, 62 points. So we've already had about a 30-point bounce just since the market's open. So it's going to be an interesting trading session overnight tonight, especially once Europe opens up, get a little bit more volume, and then around 6, 7 o'clock a.m. Eastern U.S. time. It'll be kind of interesting to see how tomorrow plays out for sure. But going to the 1-hour chart now, just more recently, you can see Thursday, Friday, we were kind of stuck in this range here, or more so just Friday. Friday, we were really stuck in between this range, kind of the line in the sand, so to speak, between roughly like 28.70 and right around 29.45 to 29.50. And we tried to break out of it at the end of the very end, like the last 15 minutes of the market trading session on Friday. We tried to break out of it. You can see on our, I believe that's my 200 SMA. On the 200 SMA, we got rejected. Or no, that's the 50. The 50 is green, the red's the 200. We got rejected at our 50 SMA like we've been almost over and over throughout the sellout. You can see we've gotten very close to it, reject, got very close to it, reject, again, reject, and again, reject. I mean, it's only going to get rejected so many times before it finally does break through, of course. But for the time being, we're back down in this little range that we were in on Friday, pretty much all day Friday. And like I said, that alone is going to be kind of interesting to see how it plays out. A lot of people are calling for it to break to the downside and go to sub 2,800. I don't know if I'm necessarily in that camp personally. I think it will by the time all is said and done. But in the short term, I wouldn't be surprised if here in the next couple trading sessions to see some sort of bounce to at least retest that 3,025 level before we continue on downward. The dead cat bounce, so to speak. I would not call Friday as a dead cat bounce by any means. It wasn't even much of a bounce. For the overall trading session, it was a decent bounce and rally into the close. But overall, I mean, you can see we've had very, very tiny little, I mean, every ounce of a bounce has just gotten smacked down over and over. We haven't really had a true bounce yet in this sell-off correction now. What is the market down now from all-time highs? Roughly, 480 points roughly. So it's down 480 points. Divided by the all-time high was 33.90. We'll just say 33.97. So the market is off from the S&P standpoint about 14% from the all-time high. So definitely in correction territory. I think the Dow was down like 12% just this week alone. Not even considering from the all-time high. So definitely in correction territory. But there's definitely still ways to make money within this market, which is what we're getting ready to talk about here in just a second. So before we get to that, just pull up our 1 minute chart again because it looks like we just got rejected again. So see, we just broke below that SMA. So let's just say hypothetically hopped in a position right now at 29.13. If we had hopped in, we'd already been up half a point, but let's just say we got in at 29.13. Again, just hypothetically, I didn't even place a paper trade or anything. Let's just kind of keep an eye on it short term and see how it plays out over the next, we'll just say 15 minutes or so. But we did just break below it. I don't know for sure if that'll hold, but we'll see. We said 29.13 roughly was our entry point, so we'll just kind of watch it and see. But anyway, so like how to make money in kind of this environment, especially if you got lower collateral. You're probably, say you're not even trading micro futures or anything like that yet, and you're wondering like what to do exactly because you're not necessarily want to go out and stock pick right now. You're wanting to see kind of where the bottom is, so to speak, which I don't necessarily suggest if you're somebody that's more of a swing trader or even long-term trader where you're holding stuff for weeks or months at a time. I would just kind of slowly buy. That's why you always have some cash on hand for situations like this. That way you can slowly buy all the way down, and then eventually the bottom will be there. You'll be buying some of the bottom. Just dollar cost averaging at the end of the day. But for those of us that trade more frequently, every day, every couple days, or even every week, these vertical spreads, if you don't know what a vertical spread is, so pretty much what you do, they have a credit spread and debit spread. We're going to be keeping it fairly simple and just talking about credit spread today, but there is also a debit spread. But so with a vertical spread, what it is if you're selling calls, because when you're collecting credit, it means you're selling the call. What you're doing is you are, scroll up here just a little bit. So what you're doing is you are going to, let me go ahead and uncheck these. Go to buy. I just want to start from scratch. Oops. Okay. So what you're doing is you're going to sell your upside call, because what you're doing is you're essentially saying, okay, I think the market, SPY, we're using SPY because it follows S&P 500, of course. You're saying that, okay, since we're showing a downward trend, at least for now, at least in the short term, probably going to continue to go down over the next, say, week or two, we're going to want to sell calls, essentially, sell covered calls. So what you're going to do is you're going to pick up pretty much a price. You want to pick a price that's pretty high up there, and when there's this much volatility, you can go pretty high up because, as you can see, premium prices are through the roof, because when volatility goes up, when volatility goes up, these premium prices are going to go up, which is the best time to actually sell calls, sell puts, do vertical spreads, that kind of thing. So what you're going to do is say, okay, I think the market's going to stay below 3,100 over the next week or two. You're going to go out about a month. You can see we have the April 1st expiration date, and obviously these prices aren't updated. They're going to change drastically by tomorrow, so don't like use this as some type of position you should trade. I'm just showing you guys an example, of course. So let's just say hypothetically we believe the market's going to stay below 3,100, which for SPY equals to about $310. So what we'd do is we'd say, okay, we're going to sell this call, and that is going to be $491. So it's $491, obviously multiplied by 100, because you're quote unquote buying 100 shares hypothetically if you were to exercise the option or whatever. So then you're also going to buy another call to cover that, because for a naked call it's a lot of money, because you have to be able to have enough in your account to be able to cover that 100 shares if hypothetically the position got exercised or whatever. So to cover that call that you're selling, we're going to buy a call that's just below it. Since obviously you can see the lower you go, the higher the premium. This is where your credit comes in. So you obviously want to spread it out a little bit, because the more you spread it out, the more premium you're going to collect. However, the more spread out it is, the more collateral you're going to have to put up as well. So you're going to want to play around with it. When I first started out, I was a noob. I would say, okay, I'm going to sell this call and I'm going to buy the one right below it. You can do that. I mean, like hypothetically, if you were to do it here, the max cost is, let's see, I think I got it flipped. No. Why is it doing this? Wasn't doing this a little bit ago. So if you were to do this trade, for example, where you did the call right below it, your max cost is going to be $1,025, which is pretty hefty. The collateral is $300. Obviously saying I don't have enough buying power because I don't have any money in Robinhood. So I actually would not do that position. Let's see. Let's go to buy, sell. So me, hypothetically, I would probably do somewhere around 3,008. And then for my sell, probably somewhere around 3,005. Okay, so there you go. There's the trade, obviously, that I was trying to pull up, but it wasn't showing what I was wanted to exactly. Let me see if it changes here. Yeah, see, it's the same max cost instead of your actual credit you're going to receive. So anyways, when you spread it out, you can see here, like your minimum credit here is going to be $146. So this is what you're actually going to collect. And this, you're never going to get your maximum, like you're not going to get the credit that it shows here. So when it says $146, it says minimum credit. That's because like if you got filled at this price, since you put your limit at 146, that's what it would get filled at or whatever. But you're not ever gonna, don't go in the mindset of thinking, oh wow, I'm only having to put up $300 of collateral. That's what I like about these trades. They're very friendly for like small accounts, people less than $1,000, which I know a lot of you guys are starting with less than 1,000, less than 500 even. So these are a good alternative, and you can see, so you don't want to go in here thinking, oh, I'm going to get around 50% return. Could you? Yes. Are you? No, because you're not. This is all based on if you hold it till expiration, because you're only going to get this if you hold it till expiration. The goal isn't necessarily, my neck is like really bothering me. The goal is not to hold these till expiration. The goal is for the market to move in your favor. That's the point of a vertical spread versus an iron condor. Iron condor, you're pretty much saying, I think the market's going to stay between X to the upside and X to the downside. So you're pretty much betting on the market just staying within this range. And with that, you would love to hold it till expiration. Very rarely does it happen, but say in this position where you're saying I'm betting the market's going to stay below this, the best case scenario is the market actually moves in your favor and continues to go down, because then those options are becoming worth less and less. And as the options become worth less and less, that's when you're starting to see your profit and collect more of your premium. So, say hypothetically you place this trade at $146 a credit, say you get filled or whatever, and say the market opens, say again, you open this trade on Friday. So let's see, we were talking about that 29.13 trade. I don't remember what time that was. We should have kept track of what time that was at. But right now it would have been a loser, unless if you had gotten out of it. So it would have been down about 5 points. But again, I don't know exactly when we decided to get into it. If we decided right in here, I don't remember. But like I said, keep up with us in Discord and you'll be able to see how those trades play out. Like I said, it's a new trading style that I'm trying on the futures. But anyways, back to what we were talking about. Say you gotten filled at that trade or whatever at the end of the day, because that's where these option prices are based off of right now. And that's when I a lot of times will place vertical spreads, is either early on in the morning or at the very end of the day. Very end of the day seems to work out a lot better for most of those trades from what I've noticed. So just something to keep in the back of your head. But say you got filled at the end of the day at 146, and the market ended the day, of course, pretty high, close to 3,000. And then say we open up tomorrow, pretty much where we're at right now, which is 29, we'll just say 29.20, hypothetically, so the market drops 70 points. Chances are you're going to wake up tomorrow and you're probably already going to be up roughly $20 to $40 on that position. That's not like guaranteed or anything. It's just from my experience and whatnot with doing these. So when would you want to go ahead and cover your profits? My target for most of these positions is somewhere around 50% profit, meaning say my max profit here is 146. Once I'm up somewhere around $70, I'll definitely go ahead and take that position off the table. It's a winner. If I get a $70 return on a $300 investment, that is definitely not a bad return. It's somewhere around, what, like 25%? Not 700, 70. $70 profit divided by a $300 investment. That's almost 25% return on your money. So anytime I can get over 50% of the profit, the max profit on a position, especially if it's like within a day or two. Like I had a Microsoft vertical spread where I was selling the calls or whatever, and the max profit was only, it was a small position. It was a very, very small trade. Like I only had to risk somewhere in like $100 or $150, something like that. And the max profit was only like $28 or something. But the position was up like $20 or $22 after the first day. So I was like, you know what? I'm going to go ahead and cover that profit and move on. So after the first day, I had already gained like almost 70% of the max profit. So of course, like if you're over 50%, don't risk it. It's not worth the extra few dollars to potentially risk losing out on that entire position if the market decides to swing against you at some point, especially how volatile the market is right now. It's never a bad idea. If you're up on any position, even if it's just $5, $10, $20, $50, go ahead and take it, because a lot of people don't even know how to make money in the market, let alone in a market this volatile. A lot of people are just losing their butts right now. So just especially like in your 401ks and all that, people are being dumb and selling low, buy high, sell low. Who knows why? Something to do with psychology, of course. But that's pretty much just a good rule of thumb, is if you get over 50% of that max profit, it's never a bad idea to take the profit off the table. And then there's advanced strategies where you could roll the position out into a further expiration date, all that good stuff. I'm just keeping it simple right now for you guys. Just as simple as, you know what, if I think the market's going to stay below X by the end of X, I'm going to go ahead and place that trade. And then once I get to my target of roughly 50% of the max profit, which for this trade would be $73, then I'll go ahead and pull that trade off the table. Or, of course, if you feel like the tide's starting to turn against you and you're still up, go ahead and take the money and run, of course. So let's just go through another example here, because I just want to give you guys kind of an idea of how these tend to play out. So like me, for example, right now, I have a few March 18th, but the ones that I'll be going into this week, like I said, are still going to be April 1st, so we'll just stick with those. And honestly, I'll probably be switching to the put side. So, like, let's take a look at these. So you can see the put premiums are much, much, much higher, of course, right? Because the market's down like 15% right now. So what I will be playing, assuming, let's just assume again that we open up where we're at right now, which is 29.20, we'll say. What I will probably play, just based on our 20-day chart, I will probably go very, very low on these positions. For whatever reason, Robinhood goes from 85 to 80 to 75. Tastyworks does it by every strike price, every dollar, of course. So we'll just stick around this 85 to 80 range for now. So what we're going to do is we're going to go ahead and buy. Let's see. Let's go with buy the 280. Sell the, what was it, 275? Yeah, so we'll sell the 275. Or no. Yeah, sell the 285. Actually, you know what? Let's do something different here. Or yeah, I guess that's okay, because that's a $5 swing. So when you're thinking of in terms of 1, 2, 3, like I said, you want to spread them out a little bit, it's a $5 difference, so that's good enough. So again, right here, the minimum credit's $127, which is your max profit. Collateral here, $300. Again, not bad. Not a bad position at all. And then, of course, you could spread it out even further. Minimum credit, you can see that jumped up to $190 by taking on $2 more of risk. And our collateral didn't change. So this would probably be the trade that I would want to place. It's a little bit more risky because it's not too far away from 2,900. You're talking about a down move to 2,870, so you're only talking about roughly 50 points from where we're at currently. And as crazy as this market's been swinging, 100 plus points on the S&P 500, I'm personally not too comfortable with going to the 287. So something I'd probably do is let's go back to buy. I'd probably go ahead and roll down to 270, and then we will sell. Let's see what the 280 would look like. 280, that'd be a minimum credit of $244, max profit $244 with a $300 collateral. So that's also another, and again, these are going to change drastically by the time we open up tomorrow, so don't try to like mimic these type of trades or anything at all. These are just hypotheticals. Again, just giving you guys kind of an idea, especially when we're in a volatile market like this. You can see crazy good returns. And again, you're not gonna. The goal is not to get that max credit. You're looking at roughly 50 to 70%. If you get 70%, that's awesome. You better take that trade and run. But the goal is roughly 50%. So say we got that. That is going to be $122 on a $300 investment, coming up on 40 to 50% return on your money within a few days. And again, this is way more safer than if you were just to simply buy a put or buy a call, because when you're buying a put or buying a call, you're pretty much going all in just on momentum. Like, you need the stock to go in your favor very quickly, where with doing these vertical spreads, which I would suggest vertical spreads over just simply buying a call, buying a put any day of the week in general, just because it's a lot safer. You're pretty much just betting on, I'm thinking that X stock is going to either stay below this price or stay above this price. I know a lot of traders that literally just do nothing when the market just goes up for a long period of time. They do nothing but just roll put spreads, rolling as in, like I said, you're rolling your position out to a further date, collecting more premium, all that good stuff. That's for a different day. We can have a whole video over that. But there's people that literally just do nothing but sell put spreads over and over and over as the market just continues to go up. And then once the market starts to fall, they switch to the call side. And then once they think it's overdone, we go ahead and go back to the put side. And they just rinse, repeat over and over and over. As you can see here, I wish it would show the percent chance of profit over here. But let's just say roughly this trade, for example, would probably have somewhere around a 74-75% chance of profit, roughly. So that's that's another thing I like to take into consideration is what is my chance of profit, meaning once I place the trade, what's the chance of profit? I like that number to be at the minimum 65 to 70%, preferably between 70, 75, even upwards towards 80. When you get upwards towards 80, though, you start to kind of cut down on your potential profit amount. And what I've noticed is a lot of times if you keep it above that 70, 75 range, you're going to be good anyways. But let's just take a look at if we did an 80% profit. So let's see, we're going to start with the sell side since that's the one that shows the chance of profit. So let's just go with this 260. Actually, we can do it the 265 because that's pretty much 80%. We're going to buy, what was that, the 260 down here? Yeah, 260. So a 5-point spread right there. So see, you can see that it came down drastically. You're talking an $88 max profit on a through, which is still not bad. I mean, if your gut's telling you, hey, you know what, I want an 80% chance of profit versus 70, then by all means, go ahead and do it. I mean, there's still plenty of profit out there. If you got 50% of the profit here, let's just call it $45 for easy numbers. $45 divided by your $300 investment is going to be 15%. And again, you're planning on getting that 15% within a week of placing the trade. Honestly, we want to see this within 2 or 3 trading sessions, hopefully, but usually roughly a week or so. That's the whole point of going out roughly a month. I do at the minimum usually 2 to 3 weeks on these. Like I said, I'm holding like some March 18s right now, and I placed those last week, so I had roughly 3 weeks. I think it was like 20 days till expiration when I placed those trades. I try to stay between that 20 to 31 day expiration because, like I said, you're starting to get more premium. The collateral is going to go up a little bit, but again, I mean, putting up $300 for a month for a potential of upwards of 15 to 30% return on your investment is not too bad. So yeah, I just wanted to kind of throw that out there for you guys who are thinking about just different ways of like, one, how to make money in the market in general. Like I said, this is not only specifically for when the market's volatile, when the market's up and down, whatever the case may be. There's people that literally do nothing but vertical spreads day in and day out. They combine it usually with futures, as well as when they buy stock. A lot of times what people do that are heavy into buying stocks, like say you're buying Apple, or say, let's go ahead and use Apple as an example because I know that's a very popular stock. So say you're buying a bunch of Apple right now, but you're concerned that, you know what, there might be some more downside pressure. Hey, how's it going? Let's see. Let's say you went ahead and bought some Apple this week, whatever, Thursday, Friday, whatever the case may be, and you're thinking, you know what, there might still be some more downward pressure on Apple. Let's go ahead and hedge our position with some call spreads, meaning, again, that you think that Apple's going to stay below X price by X date. So, again, we're going to go out roughly a month. Let's just say April 3rd, or, you know, let's do April 3rd. Let's see, so we're going to buy the call. Let's go ahead and say that we think Apple's probably going to stay below 300. So then we're going to, on the sell side, do, 297.50? Yeah. So you got roughly, or not even 297.50, let's say 295. So your total credit, you got a 5-point spread here. Your total credit is going to be 125. Let's just enter 1. So we'll review the order. So for this one, you're going to need a little more collateral because, again, it's so volatile right now. Your collaterals are going to be a little bit more. And, again, we're going out a little over a month. But still, your maximum profit is going to be 125. Again, what's your target, though? Your target's not 100%. If you can get upwards of 50 to 75%, go ahead and take that money, roll it into the next position, and just keep it moving. The only way you're going to get this is if the option expires worthless. Me personally, I'm not going to try to sit here and hold my position for a whole month just to maybe squeeze out an extra $10 or $20 when I can roll that into the next trade, and that trade can profit me $40, $50, $70. It's like you're passing over dollars to pick up pennies, essentially. So again, cannot stress that enough when you're doing these type of trades. So again, you bought Apple, say at 275, you're worried that there might be some more selling to come. You're thinking it's probably going to stay, in this case, below 295, 296 would roughly be your break even. That's another thing I wish Robinhood would put here, is what your break even amount would be. It'd be roughly 296. I can tell just from experience, maybe slightly less, but around 296 is where you're pretty much saying Apple's gonna stay below. So as long as Apple doesn't just make a $21 point upward tick in the next few trading sessions, as long as it continues to go down just a little bit, or even just kind of stay stationary for a little bit, you're going to be collecting premium because you have theta on your side. I think in this case you're delta negative, maybe. You might be delta neutral. I'm not 100% sure. But point is time is on your side. Essentially, the longer you hold the position and the longer the stock continues to either go sideways or preferably in this case go down a little bit, you're going to make some more money. And then another thing you can do, since in this case you're protecting your investment of Apple, you could even roll that profit into buying more Apple stock. So there's very many ways that people tend to use these vertical spreads to hedge their portfolios and that kind of thing. So I definitely suggest you guys don't even just like take my advice. Like, go look at Tasty Trades YouTube channel. They're the guys that opened up Tasty Works, which is what I use for my trading portfolio. Of course, they're live on the actual Tasty Works platform every day from like 7 a.m. Central Time until the end of the market day. But they have a ton on their YouTube channel, a ton of option videos. Like, you would have to probably sit down and watch them for a year straight to probably get through all of their option videos. There's so much stuff there. That's where I learned primarily a bunch of what I know about options today, personally. They were the ones that pretty much taught me that buying calls and buying puts, just straight up buying them naked, just straight up buying a call, buying a put, is the worst thing you can do. You're pretty much buying a lottery ticket, unless if, of course, you're going further out in your expiration, like 3 months, 6 months, that kind of thing. But at that point, I mean, let's go ahead and pull up a hypothetical just caller option. We'll go ahead and pull that up here. So let's see, we're in March. So let's just say 3 months, for example, which when you're buying calls or buying puts, that's usually the minimum you're going to want to go out. Unless if, again, you're a day trader, you're just looking for that quick little scalp, which is very risky as well. Like I said, it's like buying a lottery ticket in a lot of cases. I've done it before. Made huge money on it, actually, before. Lost huge money, too. Don't suggest doing it unless if, obviously, the market's just super one-directional. But, so 3 months from now, that's what, March to April, May to June. So we're going to go out here to the June 19 contracts. Let's say you think Apple is going to go up. You're going to, obviously, the safest bet is to buy an in-the-money option, which if you were to do so here, would run you $2,620. But most people don't do that whenever they're doing this. They're rolling out a little bit. They're kind of more speculating more than anything. So say you're thinking Apple probably come up and over the long period of time, preferably over $310. Doesn't have to, of course, but you obviously roll it out a little bit. You're still talking at $895 cost on that trade. And again, those prices can change a lot because the market's so volatile. You got a 135, or no, 85, right? No, I can't do math today. $65 swing just on this position right here alone. And you can see previous close was at 715, which is 715. So it did go up pretty good today. But man, they're just so risky. It's like you can see overall they were up 25% on Friday. We could see the same thing if you go over to SPY. I'm sure those options were crazy in price as well. Let's go out to June 19 as well. Let's say we're betting on it getting back up to 310 as well. So those are $919. They were actually down 10% because, of course, the market was down until the last 5 minutes of the day practically. But look, still $919. So it's it's just not worth it in my opinion. Bitcoin, yeah, I don't trade Bitcoin personally. I do have investing.com pulled up here. Looks like S&P is still holding on to that 2920. Let's see though. Let's go take a look at where is it at. I thought they had Bitcoin up here. Guess I'll just type it in. Bitcoin US dollar. Has Bitcoin been dropping lately? It's down a little bit right now. Not too bad though, considering. Let's see, it's down to 8,500 roughly. Look at the 1 month chart. Oh, looky there. Another. Or no, this is the monthly chart. I was like, I don't remember it going back above 13. Let's see, 1 hour. 1 hour chart. So it was over $9,000 just a few days ago. So it seems to have been falling pretty hard with the overall stock market. Let's take a look at the 5 hour chart. Yeah, this thing seems to be dropping pretty hefty as well. Wow, it's down about coming up on 20% already. So, I mean, if you're a Bitcoin guy, would I be buying right now? Probably not. I'd still continue to kind of hold out and see where it finds a bottom. I think your best bet's going to be around 84.50 maybe. And then if that doesn't hold, you're probably talking somewhere around 7,000 again before it bottoms out, which is quite a bit of room to the downside. But same can be said overall with the S&P 500 futures, right? So, I mean, if you pull up the S&P 500 futures, let's just go over here. I don't want to look at investing.com. They got too many ads. We pull up our 180-day chart. These trend lines, I try to draw them out pretty well just for supports and resistances. Obviously, if we don't hold 2,900, next stop's going to be somewhere around 2,800. And then if that doesn't hold, I don't even think I drew any more support lines below that just because, or actually I did. The next stop would be somewhere probably around 2,600. So if we don't hold 2,900, which I'm assuming we're not going to here in the next week, maybe two. If we don't hold 2,900, we better hold somewhere around 2750 to 28. If that level doesn't hold, then it's going to get ugly. So, say hypothetically we did come down to 2,600. Jesus Christ, that'd be a drop. Let's just say for easy numbers, we pretty much got to 3,400. So that'd be roughly an 800 point drop divided by 33.97. You're talking almost a 25% down move, which we've been here, done that. We had about a 20 to 23% move to the downside throughout the end of 2018, of course, which is why I continue to say this bear market is not dead. We're in a secular bull market. If you guys don't know what a secular bull market is, it's a bull market that's just, in layman's terms, continues to go up slowly but surely over time for about 15 to 20 years in most cases. There are a ton of little bear markets, they call them little bear markets essentially, within that secular bull market. And what does a bear market mean? Bear market means you go down, was it 18, 20%, something like that. We just had one back at the end of 2018. Looks like we may possibly be on our way to another one here in 2020. Doesn't mean the end's near. Doesn't mean the stock market's going into a massive crash. No, it doesn't. It just means that we're having another short-term bear market, and we will probably be back up to 3,400 plus by the end of the year, depending on who gets elected in the U.S. this upcoming year. How's it going there? NEM1 adjustments. Actually, man, how long's it been now? It's been a couple months. when did I do my M1 finance videos? It was a couple months ago, wasn't it? So a few months ago, like roughly 3 months ago or whenever I uploaded those videos, pretty much right after that, we went ahead and pulled all money out of markets other than like your 401k and all that, of course. Like that'd be stupid. But we put all that money into a car that we bought with cash, and we just put the rest in savings short term, trying to figure out like how much savings and whatnot we need. I am still actually in the process of getting ready to start this whole like business that I will tell you guys more about once I can legally do so. So there's a lot going on with that, but no money in M1 Finance currently. I do have, like I said, a 401k of my job that is very flexible with the funds and whatnot. I wouldn't say it's as flexible as something like M1 Finance, but that's more so like the long-term stuff. As of now, I have money in my some money, about $1,000 roughly, in my Tastyworks account, which is like more of just a normal brokerage, kind of like TD Ameritrade or Charles Schwab, all those. And I am primarily doing vertical spread options as well as futures trading as well. EWZ was green. That's the Brazil one, isn't it? How's it going there, Trade Doc, by the way? EWZ was up 1.4%, pretty good. And what did it do? It broke below that 200 SMA, and it's probably going to get rejected at it, I bet, and continue to go lower, at least in the short term until we get oversold. Which is another one that is awesome to play vertical spreads on, is EWZ, because, look, I mean, the thing moves so sideways. I mean, it continues to go up, barely, long term, but it is such a sideways moving ETF. The Brazil market in general moves so sideways. It is a options seller dream over there. Yeah, I heard that, what's his name? Buttig or whatever. I heard that about an hour or two ago. Bernie in the front. You know, I see 26, honestly, like, call me crazy, I see 2016 all over again. Bernie has all this popularity. There's another guy in the establishment, and this time it's not Hillary, it's Biden. Biden's in there. They know Bernie has a snowball's chance in hell in actually winning the overall election, or at least that's what they believe. So they're going to rig it, and Biden's probably going to get the nomination somehow. I don't know how it's going to happen, but I didn't think Hillary was going to get it over Bernie too. Yet we found out that the DNC rigged it for Hillary to get it over Bernie. I don't think whoever's going to win it is going to have a chance in hell beating Trump. That's just me personally. I'm obviously a Trump supporter. Proud to say it. Like, I mean, I'm not so crazy. Like, I'm like, oh, Trump. Like, I don't wear him on my chest or anything. But, I mean, let's just be real. The Democratic Party has just committed political suicide so much the last 2 to 4 years. And I don't see them recovering from it anytime soon. Unless if Trump just totally butchers something here in the next year. I don't see them having a snowball's chance in hell. But is not to say that we are still going to see some volatility within the market. I honestly think, I was mentioning this in our Discord group chat, this market sell-off is not just coronavirus driven. Coronavirus is what the media is focusing on the most, but the markets themselves, there's a few things going on. You got coronavirus, you got the market had priced in rate cuts, and the Fed had kind of took a step back from the rate cut talk. So that also caused the market to kind of drop. Now, coincidentally, they're starting to talk about supporting the market with a rate cut, possibly in March or even April, or maybe even 2 cuts by the end of April. So either way, you got Fed BS going on. You got the market's terrified of Bernie Sanders because the market's kind of starting to realize, wow, there's actually a snowball's chance in hell that a communist is actually going to win the Democratic nominee and have a chance to beat Donald Trump. Not going to, but again, the market is still kind of pricing that in right now. Just the thought of it frightens the market. And then you got oil. We're talking about oil in our Discord group chat a lot. I've said it time and time again. The market goes as oil goes. Every time oil breaks below $45 to $50, the market tanks. What happened here? The oil market broke that support right around 55.50. Came down clear to $50. Did have a little bit of a bounce about 2 weeks ago, roughly, right around Valentine's Day. And then what'd you see here? Flush. And what do we see with our markets overall? Take a look at ES. It's not going to be identical, of course, but what happened? Boom. When the oil market tanked last week, our market followed. Again, just keep an eye on the last 2 to 3 candles here. Don't really necessarily look at this candle, but look at like these last 2 to 3 candles roughly. Take a look at /CL. What do we see here? Little dead cat bounce, smack. And then what happened with our market? It's just annoying because no one really catches on to this, but I've just been watching the oil market since I was old enough to know what oil is, so I've kind of grown to realize the correlation. See, we had a little dip here ourselves, dead cat bounce, bam, flush. So they're never 100% correlated, of course, but I always say the market goes as oil goes, in the aspect of if oil just tanks, the market's going to tank with it. I do hope. I'm all for low oil prices, but for this entire market to stay on its legs, oil has to hold that $42 level. It just has to. Earlier last week, I was saying we really needed to hold about $45, which is about where we're at right now. But the absolute line in the sand is going to be right around that 42 to 42.50 level, absolute lowest. So that is also why I think the market has potential room to continue to the downside, because that means oil could drop another $2 roughly, $2 to $2.50. Let's say it does drop $2.50 divided by, let's just say 44.75, roughly where it's at right now. You're talking another 5.5% move to the downside. Now, does that mean that our market has to continue to move 5 to 5% to the downside, correlated like to a T? No. But that means that our market could definitely potentially swing another 3 to 10% to the downside, and we're already down roughly 12 to 15%. What were we talking about earlier with /ES? If 27 or 2800, something like that. If that 2800 level doesn't hold, 2750 to 2800 doesn't hold, we're talking about roughly another, looky there, about 10% move to the downside, which will put us down roughly 24-25%. So I'm not convinced by any means that like the selling's done. I do think at some point here this week we will have a dead cat bounce, which is going to be a ridiculous bounce, probably like 50 to 100 points on the S&P 500. Probably, what would that equal to on the Dow? Roughly 800 to 1,000 points of maybe not quite 1,000, but 700 to 900 point bounce on the Dow. I would not be surprised to see that at some point. Do not get caught thinking that that's going to last. You guys know long term I'm always bullish on the markets and whatnot, but I would not say that, okay, like that's for sure it, like that's the bottom. I was calling out the quote-unquote bottom on Friday, as in, okay, this is the bottom at least short term. I do think that 2850 to 2900 is the bottom short term before we see our quote-unquote dead cat bounce. We're probably going to retest 3000 to 3025. But ultimately, I do think we are going to try, unfortunately, to test that 2800 level support, because I don't see oil bouncing back anytime too soon. I do think oil will bounce back because I know OPEC is supposed to be meeting in March. Thank God. Couldn't have had much better timing on that. But so I'm sure they're going to talk about cutting, and the moment they talk about cutting production, you're going to see oil probably try to retest $50, which is what, roughly a 10 to 15% move to the upside, which for our markets would probably equal, just taking a look where we're at right now. Yeah, you're probably talking somewhere around 3,000 roughly, maybe even 3,025 on that bounce before a potential another leg down. And again, that depends on everything else, the coronavirus, all the other economic numbers that are going to be coming in over the next month. The more talk about Bernie and all that stuff. So, I mean, there's a lot of stuff going on right now that could potentially keep the market down. But again, like we were talking about earlier, hopefully the stream, by the way, is doing okay. I don't know if it looks like we're doing all right. We got 8 of you tuning in. That's awesome to see. But that is why I don't know if all of you have been in here the whole time. That's why we were talking about the value of the vertical spread system, specifically right now the vertical call system, because like we said, I would say close to 95% of traders and as well as investors right now in general are expecting the market to probably continue downward over the short term. Like we said, before I hop off here, I'm just going to do again just a quick little example. When we do these vertical spreads, we're essentially kind of hedging ourselves. We tend to go out roughly a month, somewhere between that 3 to 5 week range. Depends on premium and collateral that has to be put up. So what we do is we say, okay, SPY correlates pretty much hand in hand with S&P 500. So 300 on SPY equals 3,000 on S&P, pretty much dead on. So like a lot of my positions right now are between this 307, which is 3,070, between the 307 to even the 320. I have a call position right now that I'm probably going to close tomorrow, assuming we open up down. It's like a 320 to 325 that I opened on Wednesday or Thursday of last week. I'm going to collect pretty much full premium on that. It was like $72. I'm probably going to get somewhere around 50 to 60, it looks like. So that was definitely a good trade, but for this example here, let's just say, again, say you wanted to buy yourself some extra room, essentially. You'd go with the, let's just say 312, and we're going to sell, what would that be? Probably like the 310. Yeah, let's just say 310, because that'd be a 20-point differential. 20-point differential, and your break even would be somewhere around 310.50, which would be about 3,015 on the S&P 500. So for this trade, for example, you're only getting $82 roughly of credit, but it's only a $200 collateral that you're having to put up. So again, our target is roughly 50% of our max profit. The max profit's 82, so your target would be somewhere around $44 divided by your $200 of collateral you got to put up, 22% return. And again, you're trying to get that hopefully within a couple days at the most. So I just, again, for anyone that just tuned in the last few minutes, that's primarily we were focusing on the most today, is just kind of how to hedge yourself if you're in a futures contract with right now, which God bless you if you are. I feel for you on that. And just overall, like if you have 401ks, I'm about out of water, 401ks or anything like that, these are definitely good hedges against your portfolio, as well as if you're just simply buying and selling stock. If you bought some SPY and you think there's still some downward momentum, then that'd be another good time to go ahead and place a SPY call put spread. But yeah, that's pretty much it for today. Like I said, it's been a crazy week, not just for the market, but for me. Coronavirus possibly delay OPEC meeting. I've not heard nothing about that. I wouldn't be surprised. That'd be just another reason for the market to keep selling in the short term. But I've not heard nothing about that myself recently. I haven't been paying too much attention to actual like CNBC and whatnot quite as much, other than the little headlines that pop up on my phone. But like I said, I primarily watch the guys on Tastyworks now, since I have their platform. They're on pretty much all day during the trading sessions and whatnot. Which, by the way, if you're like interested at all in Tastyworks, I believe I have a link posted in the description box that it'll like take you to like what their fees and commissions are if you're like interested in that at all. Saudi banned all foreign travelers, then yeah, I guess that might be an issue. I think it's not until like later this month though, if I remember. It's like 3 weeks from now. It might be like later March, but like I said, I don't know for sure. I just know they're supposed to be originally meeting in March, but who knows? We'll see what happens. I know there's a lot of disagreement going on with OPEC right now too. Like Russia thinks we should keep on just keep on producing more oil while everybody else but Russia essentially thinks that we need to cut supply. So there's definitely going to be some more bumps in the road before we continue to go up, both on oil as well as the markets. Like I said, I expect both to probably have some kind of a dead cat bounce. I don't think oil is necessarily going to retest 50, being that that's like a 15% bounce, but I definitely think it's going to bounce probably a solid $5, roughly $3 to $5 at some point here in the next week or so. Because obviously, people always like the market doesn't always go straight up. Well, guess what? It doesn't just go straight down either. I mean, we're down like 7 or 8 days in a row now. So some point you're gonna have a solid green day, even if it's just a day cat bounce day. And honestly, I expect that to happen no later than Wednesday, personally. So we will see what happens. Trade Doc says check out the podcast. Oh, check out his podcast. Okay. Yeah, I'm assuming it's the same name as your channel or your whatever you want to call. I don't know if you have a channel, but I guess we will look it up, or feel free to shout it out here. The chat will still be live after I end the stream for like 5 minutes or something like that after I end it. But like I said, if you guys haven't already, definitely feel free to join our free. Like I said, nothing with this channel I charge for at all. This is just for us to get on here and just kind of throw ideas off one another, and that's what our Discord group chat's all about too. There's like 130, 140 members in there, so it's awesome to see that community continue to grow. We have plenty of you guys active in there as well as me. I'm active in there pretty much every day right now, and it's the easiest way if you have any questions or anything to reach me personally. Amplify Gaming Dude, hey, how's it going? BYND, so let's take a look really quick before I end. You caught me just in time. I was just about to end the stream. Let's see. Oh, this is Beyond Meat. One of my least favorite companies right now, just in general. Let's see. Forget it's not that old of a company. Let's look back. I remember when this thing went over $200, I knew it was going to pull back quite a bit. Let's see, technical wise, let's see, we just had the earnings. Ooh, they missed on their earnings, shocker. Does have quite a solid gap to fill, as does the market overall. Man, it got just hammered after the earnings. I'm assuming they did not have great guidance. I would definitely look into the conference call or whatever and see what kind of guidance and whatnot they gave, because a lot of times, even if companies have a miss, if they have solid guidance, that guidance will kind of cancel out the earnings report. Sometimes it doesn't, but I'd definitely take a look into that earnings report, the conference call. Like, a lot of times you can get the actual transcript of it and try to analyze it and see kind of what you feel for the company. Me personally, I'm not going to touch it. Probably would be a smart idea, especially at these prices, to maybe dab your toes in it. But it might still have a little bit more room to go. I mean, it might dip into the low 80s, even upper 70s before continuing higher, especially if we're assuming the market overall is going to continue to go down. But I can understand why it's a little bit attractive here, because, I mean, if it just fills the gap, you're talking about roughly a $20 profit, roughly $15 to $20, which is going to be roughly 25% return on your money. So I mean, I can see it. If you value them as the thing is do you value them as a company? Do you think long term they're gonna actually beat their earning estimates and continue to profit and build on their profit margins and all that stuff? If you do, then definitely. And then of course, lastly, if you actually like the company, but if not all three of those are checked, then I would not. I would just kind of set it out. Sorry, I got an Amber Alert. That's close by too. But yeah, I mean, if it doesn't check every mark of that, then I would just kind of hold out. If you don't think it's a great price, I would definitely look, like I said, at that conference call, the transcripts or whatever, before making any determination, because it could easily, since the market's looking like it's going to open up down as of now tomorrow, this thing could easily drop another $3 to $5 minimum tomorrow. So, me personally, I'd probably set a target entry point around $80 to $84. I want to see it come down a little bit more. I would definitely wait for some sort of confirmation on top of that. But I would not want to get in this thing above $85. That's just me personally. And that's if the guidance outlook looks good, which from what I've been hearing, the little bit that I have been hearing about Beyond Meat, I wouldn't be surprised if the guidance does look good. I mean, they've been expanding everywhere the last just 6 months, really. I mean, they're in restaurant chains now and everything else. I saw their stuff right up the road at my grocery store, actually. Almost bought the wrong shit. So, I mean, they're expanding very quickly. I think long term, if you're looking very long term, then yeah, I mean, it's probably a steal. It's probably going back up to $200 within the next 5 or 10 years at the latest. But, unless if we have just a total economic collapse or something. But, me personally, though, I want to wait out a little bit. But that's just me. Won't post, just Google it. Oh, okay. That's true. I'm gonna short down NASDAQ. Yeah, that's what a lot of people are playing right now, is shorting down NASDAQ and S&P. MRVL's earnings. Let's take a look real quick. Whoa, buddy. So it broke pretty much the most critical support level. Good thing is it had a hell of a bounce itself recently. This may not be a bad entry level. I want to see, it looks like it's going to try to pull back a little bit. Let it pull back, bounce around, hopefully $21. My target entry would be $20 to $21, assuming that it bounces, of course. And then my target profit would be 23 roughly, because you're probably going to hit quite a bit of resistance around $22, $23. So $22.50 would be my target exit, just because you're going to, like I said, hit a lot of resistance, and at that point it could potentially try to go down even further. So at that point you're looking at roughly 10% profit or so, 10 to 12. Just look at the risk reward, see if it's there. I don't know a lot about this company, honestly, but it does look like a potential good setup. Just keep in mind that ever since it hit a high, it's kind of been on this downward movement. So yeah, like I said, it looks like right around that 23 level. And that was just a quick, don't take that trend line too seriously. It was just a quick drawing, essentially. So I still think 23 roughly would be a good target exit for sure if you got in at $20. So actually that'd be about 15% profit. So good potential there too. But when we take a look at our flexible grid, you can see overall the Dow is looking down about 300 points, almost cut in half. It was down over 500 points early on in the session. The Japanese market is down pretty much identical. The Qs are down 1.5%. Oil down still right around that. It's just took another leg lower down to 44.50. And when we take a look again at ES, I'm sure it's down about 1%, 1.5%. It's down to 29.10. It just took another leg down recently as well, even though it's very small. So again, if you did our little quote-unquote experiment that we're doing right now, where you wait for confirmation to break below the 8 EMA on the 1 minute chart, you got in around 29.17. And you're up about 7 points right now. So, like I said, if you're not in our Discord group chat already, I will keep you guys posted on how that trading style continues to work out for me. The first full morning that I did it, or I guess night into morning, because I did it Thursday night into Friday morning, I profited like $1,100 just trading one ES contract at a time. Again, that's paper. I'm just trying this trading method out. It's just something I've been watching very closely over the last few days, actually the last week roughly, because I noticed there were some, once you would either get above or get below your 8 EMA, you would tend to see some pretty big swings, and by big, I mean like 5 to 10, upwards of 20 points. Like I said, if we go back to Friday, for example, you see here, boom, we broke above it. If you got in at 28.95 roughly, you ended up profiting roughly 60, 70 points, depending on when you got out. Obviously, again, that doesn't happen every day. We had a hell of a bounce at the end of Friday, but it works. This trading style seems to work very, very, very well when you have a lot of volume like you have during the actual U.S. cash trading session. You can see it works on the downside as well. You get in around 29, 25, we'll call it, and you wrote it down, got out as soon as it broke above. You got roughly, 30 to 35 points on that trade alone in a period of how many minutes? 20 minutes. That was a 20-minute trade right there. So, and again, this isn't a volatile market. We'll kind of see how it works whenever the market stops being so volatile, which at this rate doesn't seem to be coming anytime too soon. But, yeah, that's pretty much it for this stream. Hopefully you guys did enjoy it. If you did, definitely make sure to smash that thumbs up button. I greatly appreciate that. And definitely feel free to let any friends or family or coworkers know about this channel, as well as our group chat, if they're looking to get in the stock market or just try to take a step towards financial freedom, be it get out of debt, have an emergency fund, any of that good stuff. We're all about just growing this community. That's what we're all here for at the end of the day. But, yeah, hopefully you guys had a good week. Hopefully you guys managed to not lose as much money as the people holding it in their 401ks lost this week. And hopefully you guys stay green going into next week. But until next time, guys, keep on going out there, make your profits, covering your profits, and achieving your financial freedom this year. And I will see you guys, like I said, hopefully sometime between Tuesday and Thursday this week, since we didn't get to last week. But if not, then for sure Sunday again for another Sunday Stock Talk. But until then, take it easy, guys.